Welcome back to the Crypto World channel, everyone. My name is Josh, and right now, Bitcoin is forming the same pattern in this indicator as we formed back here, which can potentially give us some insight on what Bitcoin is about to do next. I will also be taking a look at some very important moving averages on the Bitcoin charts, alongside other Bitcoin patterns playing out right now, and the Bitcoin dominance seeing a bounce to the upside. All of that and more in this video, so make sure you're watching all the way to the end of this video so that you're not missing out on any of this important information. And just before we jump into it, make sure to hit the like button down below. And if you're new to the channel, you might as well subscribe with notifications turned on for more updates just like this every single day. But with all of that out of the way, let's get straight to what this video is about. It's right here on the Bitcoin US dollar charts on the daily time frame. And first of all, for the brand new viewers on the channel that don't know what these green zones are just here, they are the time periods where Bitcoin was sitting in extreme fear on the Bitcoin Fear and Greed Index for at least longer than 1 day. So obviously over the past 1 week, if you've been watching my videos, we have been sitting in extreme fear. The exact same thing was happening at the end of September and also during May, June, and July. We've seen this happen time and time again for Bitcoin, and usually all of the time periods where we're sitting in extreme fear turn out to be great buying opportunities for the longer term. And the fact that the daily RSI for Bitcoin has officially hit into oversold territories, which is something that we haven't seen since the bottom back in May, that is another bullish sign for Bitcoin moving forward over the next few months or so. But that's a lot of what I've been talking about over the past few days on this channel. Now focusing our attention to the MACD for Bitcoin on the daily time frame. As of right now, technically speaking, yes, it is still in a bearish trend. We have not confirmed a bullish cross just yet, but when we're zooming in closer so we can see the histogram right here, and for the beginners out there, that is just this element of the MACD indicator. And what we can see forming in the histogram on the daily time frame for Bitcoin is a type of pattern that resembles an inverse head and shoulders pattern. Now, inverse head and shoulders patterns can only really be used on the price, but with that being said, this is still important for Bitcoin because of 2 reasons. First of all, an inverse head and shoulders pattern historically is a bullish pattern, and that is not all, because the second reason is the fact that we've seen this exact pattern play out back here during September. Obviously, back in August, we were looking really bullish, and then leading up to the September correction, but just before we entered the correction, we had already formed what you could call the left shoulder for this inverse head and shoulders pattern, and then the head was formed during the September correction, and then the right shoulder was formed as we were sitting in extreme fear. And we have seen exactly that play out. As you can see, the left shoulder formed just before we entered into the correction, and then we saw the head form as we were in the correction, and the right shoulder has been forming throughout this time period where we have been sitting in extreme fear. So what does this mean for Bitcoin? Well, first of all, I want to make it clear that nothing is guaranteed in these markets, but if the MACD continued to play out like the September correction, and if that also transferred over to the price action, then we could see a recovery starting within the next few weeks. Once again, I'm not saying that's definitely going to happen because nothing is guaranteed. All I'm saying is that was the outcome back here for the same pattern that we're seeing right now. But to be on the safer side, obviously it would be good to see a bullish cross in the daily MACD and the histogram flip back into the green zone, which as we saw back at the end of September leading into the beginning of October, that there basically confirmed the bottom for the correction as the bullish cross was setting up the next move to the upside. So as I mentioned earlier, right now we have not seen a bullish cross in the daily MACD, so that's definitely something that I'll be looking out for moving forward. And just before I cover the short-term Bitcoin analysis and the Bitcoin dominance, I'll first take a look at the weekly time frame for Bitcoin so that we can look at these 2 moving averages. The moving averages that we have here on the charts is the 20-week simple moving average. That's the green line just here. And then the red line is the 55-week simple moving average. And why have I chosen those values? Well, looking at the 20-week simple moving average, that was our primary line of support during the 2017 bull market. And we also found major support along that moving average back in September. And I've chosen the 55-week simple moving average because of 2 reasons. First of all, because it's a Fibonacci number, and usually Bitcoin likes to respect Fibonacci numbers. And second of all, just the amount of confluence that we've seen around this moving average. For example, that was basically exactly where we bottomed out back in July at around 30,000 US dollars approximately. And also the moment we broke above these moving averages back in May 2020, we pretty much immediately flipped them into support, which was obviously a bullish sign. But right now, having Bitcoin below the 20-week simple moving average is obviously not a bullish sign. That is a bearish signal. And the last time we broke below this moving average was back during May, and basically we had a couple months worth of sideways price action before then we recovered back to the upside close to 2 months after that crash. And back in the March 2020 crash, it took us a little over a month to recover back up towards these moving averages. So just keep that in mind. It's going to take some time for this recovery. But what's great to see here is the fact that Bitcoin is still holding above the 55-week simple moving average, which is right now coming in at around 45,000 US dollars. And by the way, the 20-week simple moving average is coming in at around 52,000. So for the bulls to regain control of the Bitcoin price, we really need to break back above 52,000. But obviously a strong break below 45,000 with a few weekly candle closes below 45k, that would be a very bearish signal, and we have not seen that for Bitcoin since the March 2020 crash. Now jumping into the Bitcoin dominance on the daily time frame, what we could see here in the shorter term is the fact that right now we are getting a bounce from this major level of support coming in at around 40%. I've been letting you know for the past few weeks now on the channel that while we were in this downtrend, technically that was a short-term altcoin season, but I've been saying that we've got major supports coming in at around 39 to 40%, so it is a strong possibility that we could see a bounce from that level, and if we do play out a bounce from that level, then that could mark the end of this short-term altcoin season, because for the beginners out there, if the Bitcoin dominance is going to the upside, Bitcoin is performing better than the altcoins on average, but if the Bitcoin dominance is dropping to the downside, that's not necessarily bearish for Bitcoin, it just means the altcoins are doing better than Bitcoin. So once again, in the immediate short term over the past few days, Bitcoin has been doing better than most altcoins. So I'll definitely be keeping an eye on this, but right now you can see that we are forming a descending triangle pattern, which historically speaking is a bearish pattern. And if the Bitcoin dominance is looking bearish, that is actually really bullish for the overall crypto market, because when we're zooming all the way out here on the daily time frame for the Bitcoin dominance, what we can see is these major moves to the downside and major moves to the upside, and these huge moves to the downside happen when bull markets are happening. For example, back here, that crash to the downside in the Bitcoin dominance was during 2017, and then when the Bitcoin dominance started flipping really bullish again, that was during 2018 and 2019. So obviously that was more of a bearish time period in the crypto markets. And then as we entered into the second half of 2020 and early this year, the Bitcoin dominance began trending to the downside again, which was bullish for the overall crypto market. So the fact that we're forming a descending triangle pattern, a bearish pattern right now in the Bitcoin dominance, technically speaking, that is more bullish for the overall crypto markets looking over the next few months or so, because of course this is on the daily time frame. So when I'm saying bullish for the overall crypto market, don't necessarily expect bullish price action overnight. Now zooming right into the 4-hour chart for Bitcoin, what we have here is obviously that bullish divergence that I talked about the other day, and I basically let you know back here that it's very likely we're going to see reduced selling pressure in the immediate short term, with either a little bit more sideways price action or a slight move back to the upside, and that's exactly what we're seeing right now, just reduced selling pressure. And honestly, after a crash like what we saw around a week ago, it is very normal for Bitcoin to experience a lot of sideways price action to basically stabilize after the crash. And once again, around a week ago after we saw the crash, this sideways price action was pretty much what we were expecting. And now zooming into the 2-hour time frame, just to give you a quick update on that head and shoulders pattern that I have been talking about over the past couple of days. Obviously, we did end up forming this pattern and breaking to the downside, and technically speaking, this pattern becomes invalid if we break above the neckline or if we hit the price target. And the technical price target for this pattern is coming in close to $45,500 US. Looking at the neckline for this head and shoulders pattern, that is coming in at just above $50,000 US, closer towards $50,500. But something important to mention is if we see a lot of sideways price action after this head and shoulders pattern, then eventually this head and shoulders pattern will lose its significance. So basically, if we don't play out this head and shoulders pattern really soon, then simply because of the amount of time it's taking to play out this pattern, that is something else that can also invalidate this pattern. And if you want to stay up to date in the crypto markets at all times, definitely make sure you follow me over on my Twitter, and the link to my Twitter is in the description down below and also in the pinned comment. And of course, all of that extra content over there is completely for free. If you enjoyed this video or got something valuable out of it, please make sure to leave a like down below. And if you're new to the channel, make sure to subscribe with notifications turned on so that you're not missing out on any of these future updates that I post every single day. We are only 2,000 subscribers away from the huge 100,000 subscriber milestone, and honestly, I can't thank you guys enough. Seriously, I appreciate every single one of you. And before you click off, make sure you're checking out one of these uploads if you haven't already, because these videos just here can potentially help you make a lot more money in the crypto markets. But anyway, that is it for this video. I really hope you enjoyed, and I'll see you all in the next video.